Hello and welcome to the Killik and Co market update. September is here already. It's been a relatively quiet summer in terms of the volume of trades going through markets, but we would expect that to start picking up a bit now that the summer holidays are over. Markets performed very well between mid-June and mid-August, as you can see by this chart here showing the S&P 500 index. However, markets have started to drop a bit over the last couple of weeks, as you can also see by the chart, and the S&P is now back down below the level of 4,000. We've also seen quite a pickup in volatility over the last couple of weeks. Here's the VIX index, and you can see that big spike in 2020 when we first went into lockdown. You can also see there was quite a nice decline in volatility throughout the summer, but it has certainly started to pick up again over the course of the last couple of weeks. And there are a number of different reasons for this. One is certainly concerns about high energy costs for individuals and businesses as we move closer to winter. But another reason this week is certainly some comments from the Federal Reserve. This week, the Fed made it clear they would be very keen to continue with raising interest rates, even if they start to see signs that inflation is starting to slow. So that really did cause a few wobbles across markets this week. And these higher interest rates in the US are also having an impact on currency markets. Because US interest rates are now relatively high compared to rates across the rest of the world, money is starting to flow to the US in search of those higher rates. And for the pound and the euro, that means that the exchange rates have weakened. Here on this chart here, we've got the pound in green and the euro in pink, and you can see both of those currencies have really weakened over the course of this year so far. And that causes a real problem for central banks in Britain and Europe. With their currencies being so weak, it means that imports are very expensive, and that's going to feed into inflation numbers. However, if they increase their interest rates in order to strengthen their currencies, that's going to cause their economic growth to really slow down. So it really is quite a difficult situation that these central banks find themselves in. Also this week, we've had the latest FTSE 100 quarterly reshuffle, and it's always worth looking at this to get an idea of what types of companies are doing well and what types of companies are doing less well. This week, we've had 3 companies being promoted into the index and 3 companies being relegated out of it. Let's take a look first at the ones that have been promoted into it on the top row here. Firstly, we've got the FTSE, or Foreign and Colonial Investment Trust. It's actually the oldest investment trust in the world. It's got a very global focus, and this has enabled it to grow over the course of the last few years, and it's now big enough to be included in that FTSE 100 index. We've also got Convatec, which is a medical company focusing on wound care and also diabetes. Medical companies tend to be quite resilient, particularly in times of market weakness, and that's one of the reasons why this company is now big enough to be included in the FTSE 100 index. We've then got Harbour Energy, which focuses on North Sea oil and gas, and we know these types of companies have been making supernormal profits recently, and Harbour Energy shares have now gone up enough to make it eligible for inclusion in the FTSE 100. In terms of companies being relegated, first we've got Aberdeen, formerly known as Standard Life Aberdeen, formed from the merger of Standard Life and Aberdeen. And this company is now focused on managing investments, and for that it charges a percentage fee. And as markets are weaker, that means that fee income will tend to be lower. So that's one of the reasons why this company has dropped out of the index. We've then got Howden Joinery, which focuses on home improvements, particularly kitchens. We saw a huge increase in the number of consumers improving their homes as we moved out of COVID. But that's really slowed down as interest rates have gone up and people have really experienced a cost of living squeeze. So that's one of the reasons why Howden Joinery has dropped out of the index. And then finally, we've got Hikma Pharmaceuticals, which focuses on generic pharmaceuticals. There's been quite a bit of pricing pressure in this area over the last few months, and they've also had a problem with one of their new major products being delayed. So there's a couple of reasons there why that company has dropped out of the index. And finally, the world's largest offshore wind farm is now fully operational. It's off the coast of Yorkshire and it's owned by Danish company Ørsted. Electricity generation companies, including renewables, are doing very well at the moment because the price of electricity is so high. But despite that, Ørsted's share price has been quite weak recently, as you can see by the 3-year share price chart here. It's also worth noting that British company SSE is in the process of building an even bigger offshore wind farm. So to end on a positive note, the UK really is becoming a leader in offshore wind. Moving on to have a look at next week, we're not expecting results from any companies on the Killik & Co covered list, so that leaves me to wish you a very happy weekend, and I look forward to seeing you next Friday.